certainly our economy at this point of June the 21st, 2022, the economy has kind of gone, a little bonkers. Things are costing a lot more these days. And on top of that, we're coming out of a market that where we saw very low inventory and we saw very low interest rates, which created a huge demand on homes. And now we're kind of, I don't know, maybe things are changing a little bit, but certainly the interest rates have gone up
I would say
substantially.
Substantially, yeah, definitely.
That's a good word to use.
Yep.
Substantially. So help people understand what actually happens behind the scenes when interest rates go up. Hey, what's going on, everyone? It is Tim here with the TMA Connection, where we interview the people in our community that are making a difference in the lives of others, and as well as sprinkling a little bit of real estate in there on our shows. And today we're kind of doing a little bit of both because we got a difference maker here, but we also are going to be talking about interest rates. And while that might sound boring for some people, it is very, very prevalent right now in the time that we're recording this. And of course, if you're listening to this 2 or 3 years from now, it might not apply. But as of
2 or 3 days from now.
Right? I mean, we could certainly talk about how quickly things are changing, but interest rates are on the rise. We've been, over the past few years, we've been subjected to super low interest rates, and now they've climbed significant. Well, we'll let you be the judge of that, whether it's significantly or not. We'll talk about that and how that compares to things historically. But we're talking about everything interest rates today to help you get a better knowledge of what that means for you as a home buyer and why it can be a positive thing as well. So without further ado, I'm going to introduce you to Mr. Greg Johnson. He's with APG Federal Credit Union. That is Aberdeen Proving Ground Federal Credit Union out of Aberdeen. Out of Aberdeen?
We're actually headquartered in Edgewood, but we have you're open to anybody who lives, works, worships, volunteers, or goes to school in Hartford, Cecil, or now Baltimore County and City.
Nice.
So we have a pretty good range of
Great
opportunity there for people to join.
Yeah, and when you're working with a real estate agent, one of the things that we want people to do is to work with a lender that's a good qualified lender who's going to do a really good job. And certainly Greg has done a very good job with several of our clients in the past and gets them to the settlement table. So can't say that for everybody, but with Greg Johnson, that is the case. So Greg Johnson, welcome to the TMA Connection, my friend.
Thank you so much for having me.
Yes, and if you actually go back onto the YouTube, you're going to be able to pull up an older episode when we first started doing this and see how much we've changed over the years.
It'll be a big difference, I'm sure.
You haven't aged, my friend.
Well, you've become more handsome. That's what's going on.
Well, let's go. So let's start it off with this. You're Greg Johnson. You're with APG Federal Credit Union. Tell us a little bit more about who you are.
So I've been in. My name's Greg. I'm from Bel Air. I live with my wife, and we have about 6 cats now. One chameleon, veiled chameleon, and about 50 fish because I have a 230-gallon aquarium. We don't have kids, but I have a sister who is widowed, and we do hang out with her kids a lot. Okay. So it's kind of a best of both worlds situation. We get to pass them back when we're done having fun.
Sure. Shout out to Melanie.
Yeah, that's right.
Hey.
So yeah, I've been in banking since 2003. I've been in the mortgage field since 2013. So it's going on. This month will be 9 years actually that I've been doing this. So I was away from the credit union for a little while. I did my own thing for some time, and then I just kind of discovered I really more appreciated the working with people and not having to chase a commission. I really like the idea that I'm a salaried person now and that I can really focus on helping my borrowers the best I can.
Yeah, that is awesome, and certainly you have better set hours now, but still available on the weekends when I give you a call.
That's right. I always treat my realtor partners, like that, and my borrowers who I really need to talk to. It's tough sometimes because you always have something going on the weekends, but it's something I've always done, and I'll keep doing it.
And you do a phenomenal job with it.
Thank you.
And hey, we realtors and our buyers, we go shopping on the weekends.
Right.
We need you.
That's right. Exactly.
We need you. All right. So certainly our economy at this point of June the 21st, 2022, the economy has kind of gone, a little bonkers. Things are costing a lot more these days. And on top of that, we're coming out of a market that where we saw very low inventory and we saw very low interest rates, which created a huge demand on homes.
Right.
And now we're kind of, I don't know, maybe things are changing a little bit, but certainly the interest rates have gone up
I would
significantly.
say substantially.
Substantially.
Yeah, definitely.
That's a good word to use,
Yep.
substantially. So help people understand what actually happens behind the scenes when interest rates go up.
Okay. Well, so the main thing that's driving rates right now, so mortgage rates track with something called mortgage-backed securities, which are essentially bonds. And typically speaking, when the stock market does well, the bond market doesn't do as well because people are investing in stocks which have a higher return on investment. And then, vice versa, people who, when the stock market's not doing too well, the bond market ticks up because it's more sure investment.
Okay.
However, I've noticed recently that the stock market's been falling and mortgage-backed securities have been coming down.
Oh, wow.
And we're talking about some days, typically when you see a difference of about maybe 10 basis points in mortgage-backed securities in a given day, up or down one way or the other, we're having days where it's 104 down. And so that's what's really been driving these rates right now. And plus, of course, inflation. And the Federal Reserve just raised the Fed funds rate, by 0.75% for 75 basis points. So that's going to trickle down into other areas of the economy as well as they try to stem inflation.
Gotcha. Okay. So talk to me a little bit about basis points for the person that doesn't quite understand what that means.
Sure. So people talk about points on mortgage loans. Points are like 1 point is equal to 1% of the total loan amount, not the purchase price, but the loan amount.
Gotcha.
And 1 point is 100 basis points. So a basis point is 0.001. Is what it really amounts to.
Okay.
So what happens with these mortgage-backed securities? They go up and down a little bit on a daily basis, but like I said, we've been seeing huge, just peaks and valleys like you wouldn't believe over the last several months, and that's really what's driving these rates.
Gotcha. Can this be a positive thing?
So there are positives to it. Certainly, maybe not so much in the fixed 30-year fixed vanilla mortgage field that you have. But I think what's the silver lining is that there's going to be a downward force on home prices.
Okay.
Because what's happening is you have somebody who may be right now I've got them pre-approved for $400,000, but that was done back in April when rates were in the fours, right?
Gotcha.
Or whatever they were back then. I'm not sure exactly where they were, but
Right.
I have somebody approved for that dollar amount. Well, they come back to me and they're looking at the same $400,000 range, and we find out now that that's putting them over their debt ratio is too high, and we can't do the loan because of the rates. So what I'm thinking is that as people's buying power is going to start to dry up a little bit because these rates are coming up, because when you have a higher rate, you have a higher monthly payment.
Yes.
And therefore your buying power is reduced because we have a set limit at which we can't exceed a certain debt ratio.
Yeah.
So I think there's going to be some economic drivers, just normal market stuff that drives the price of housing down. It's not going to be we're not going to have a situation like we had in 2007 and 2008, I don't believe, but I think we will have a correction.
Okay.
So that could be a silver lining, because people who are going to be able to maybe get more house for less money at some point. I don't think it's going to be a huge buyer's market anytime soon, but it can help kind of mitigate these crazy high prices where people are making these huge offers, like 20,000 over, 40,000 over the ask price.
Yeah, and I think from my perspective in accepting offers for sellers or presenting offers for sellers for them to accept, it's like maybe a year or two ago we were getting 15 to 20 offers on one house,
right,
with all these different benefits to those offers,
waivers,
that were making it enticing, waiving appraisals, waiving inspections, and all that. And now we're starting to see where it's maybe you're getting a handful of offers. So your percent chance as a buyer right now is there's a
little
greater,
better.
a little bit, a little better,
Right.
a little better.
Right.
There's hope, and I think because it went so far one way, the pendulum has to kind of come back a little bit.
It does.
And but yet we're still in a market where we don't have as much inventory. So there is still a demand. It's just not as competitive, I think.
As it was.
In my perspective, at least.
Yeah, and I think that, like I said, that's going to be a self-fulfilling prophecy. It's going to be create more opportunities at some point. When these housing prices level off a little bit, people will be more willing to list.
The competitive nature of the market, and so we are, before we were getting multiple offers that were 15 to 20, and now we're only getting a few. But it's you getting a better shot, a better percent chance of getting your offer accepted.
Right.
When you're only looking at being up against 3 or 4 other offers.
Exactly. Yeah. I mean, I think that's going to improve people's chances, and I think that more people will be. I mean, I do think more people will list their homes as well. I think that's coming at some point.
Yeah.
So I do see that.
Getting a little bit more inventory.
Yeah. Exactly.
Yeah. We do monthly updates, and I didn't do one for the month of May because usually the numbers come out 10 to 12 days after the first of the month for the previous month. And, so it's going to be interesting to see, are we in fact getting more inventory? And certainly it depends on the geographical area too.
Oh, definitely. Yeah.
So, cool. So, how do interest rates going up compare with interest rates of the past?
Okay, yeah. I mean, I would say, just to finish up on the whether there's positives, I would
sure.
say that the savings rates are also increasing as well, which that's not a huge boon for people who are trying to buy a house, but you do get a higher return on your investment. I don't think it's commensurate with how quickly the rates for mortgages are going up, but I still think that that's a positive. And that also the rising rates do ward off inflation, which is at currently 40-year highs.
Right, yes.
So yeah. But yeah, as far as what you were saying about the rates, I mean, this, I have a chart here, a graph that shows the interest rates from 1971, which is when they really started tracking, until now, today.
Okay.
And honestly, there's this curve here. I mean, this is back in the early 80s. When we had at the end of the 70s, we had what they called stagflation. And which is basically inflation and with a combination of other negative economic factors.
Okay.
And so in the 80s and in the early 80s, the rates were they were closing in on 19%. Wow. So even though the rates are definitely higher than where we've been incredibly spoiled over the last, I would say, even maybe 3 years, I guess I could say. I mean, they came down a little bit in 2020 because of what happened with COVID, but they also, they were at historically low levels at that point. So yes, there's an increase from the historically low levels, but at the same time, it's not this massive, we're not seeing double-digit rates right now.
Sure.
Now, that being said, like I said, the issue with, being able to afford a house, I mean, you're talking about a difference between, in the mid 4s and the low 6s. You could be, depending on the purchase price of the property, be talking about $300-400 a month in payment. So it's a pretty significant change, and so it's gonna. I think like I said, is it's going to be a natural driver of the prices coming down.
Sure.
People aren't going to be able to afford as much house now.
Right.
So, and then you're going to have these houses that are sitting. Maybe for
especially
a little
those
while
the higher end properties.
Right.
Certainly with a 5-6% interest rate.
That makes a huge
$900,000 home. Exactly. That's a huge difference, right?
Yep,
so,
definitely.
Okay.
Definitely.
So we historically, so basically what you're saying is, we're at 5-6% as of the day of recording right now. Who knows? Do you think it's going up more?
I see no reason. If I'm advising a borrower about whether he or she should lock the rate in, I'm not letting them wait. I'm letting them wait if they want to, but I'm not advising that at all.
Okay.
And the reason is because I've seen so much volatility. I heard a prognosticator who's been in the mortgage industry and a commentator for it and commenting on past market trends and things like that. He said at the beginning of the year that he thought that rates were going to drop after June, but I've don't see any indication of that being the case. When I'm seeing these numbers for mortgage-backed securities on a daily basis, they seem to consistently point in the wrong direction, especially now that we have the Fed funds rate being raised 0.75 point.
Yeah, and somebody that I was listening to at the beginning of the year was saying that, we're right around that 3% mark, that by the end of the year we'll probably be around 4%.
Right. We
And
could
we've
not have possibly,
surpassed that.
very much so.
Yeah.
And we could not possibly have predicted this.
Yeah.
And it's been so volatile.
But historically, as things go up, will it come back down? And of course, you don't. I'm asking you, and we don't have a crystal ball here, but but in your experience, are we going to see interest rates dip back down again? Maybe not as low as they were. Maybe not. We can't predict the future like that.
Well, they certainly did from 2000, because the last time we were where we are today was in 2008.
Okay.
And that was pretty, I mean, it was during, but it was also after that whole big crash with, the housing crisis that we had in this country. And so people were starting to buy, they were buying houses for much more reasonable values. I mean, I can remember my dad listed in 2005. We bought that house in 1986 for 90 something, and he sold it for $390 in 2005. And it was just it was like a 3-bedroom, 3-bath single family home. Yeah. I mean, the appreciation on that investment was insane. Yeah. And, of course, that lady who bought the house is probably just now, or maybe just a few years ago, finally coming back to where she's at a decent, equity position in the home.
Gotcha.
So,
yeah. But, real estate as an investment, as an equity position over the long term, it tends to pan out well for people.
It does. It absolutely. Yeah. I mean, if you're renting, you're just throwing your money away. I mean, that's literally what you're doing. You're throwing your money away.
And the rental market is even, and in my humble opinion, is even worse.
Right.
As far as the lack of inventory, and then, with all the costs going up, landlords are now increasing their rents.
Yep.
And of course, you're paying the landlord's mortgage plus some because it is an investment property. So
yeah. If you have the ability to not rent, it is definitely, I mean, it's an investment that you'll never, you're always going to have value in your home. There's always, it's always going to be there. I know that, like I said, that there's going to be some kind of a correction, but I don't think it's going to be one that where we had it back then. It's never going to get there again.
And I know the answer to this.
I shouldn't say never again, but it's not anytime soon, I should say.
Yeah, I know the answer to this question, but maybe for somebody that doesn't, and they've heard of the housing market collapse in 2008, and of course how inflated everything was right before that crash.
Right.
What makes now different than before?
Well, before there was a ton of inventory, so it was a buyer's market back then. So there was all this inventory out there, and so it was saturated, and there was all these houses for sale, and people weren't having to really do anything close to what they're doing these days. They were actually probably getting maybe some seller assistance for closing costs and things like that.
Yeah.
Maybe even some sales price concessions and things back then. Whereas now, it's the opposite.
Yeah.
So I think what's happened, the main difference is the amount of inventory out there is going to prevent it from getting that bad.
Yeah.
Because there's just not that much out there.
And would it be safe to say too, the lending institutions are now more regulated?
Oh my gosh.
Now versus back then?
So I was not in mortgages at that point. I never saw it.
So this was not Greg's fault.
That's
in
right.
2008 had nothing to do with Greg. Okay.
It had nothing to do with APG either. I will say, for our credit union, APG Credit Union, I mean, they have always been consistently conservative, but also, looking to help members. I tell you, member need is a huge thing with the credit union. So, but I will say that, we never offered any of those crazy products that were out there.
Gotcha.
And we also never, we never gave loans to people that should never have gotten loans in the first place. So that was the big reason for that.
That was a big reason. And that's why a lot of people are like, well, is the market going to tank again? And I don't see that. And the sources that I'm listening to, we're not seeing that.
Right.
The demand is still there. Interest rates are a little bit higher, but I don't see home values just completely tanking.
No.
No.
That's not even prognosticated at all. I don't think. I do see the value of the dollar plummeting. I mean, that's pretty clear whenever
Yeah.
you go to buy groceries or gas or anything right
My
now.
goodness, right?
But I don't think that that's the case with real estate,
Okay.
at least at this time.
At this right.
Yeah.
As of
I
this
always have
very
to qualify.
moment.
Exactly.
All right. So what would you say to people that are on the fence? And I think we've kind of alluded to this already. Like, should I buy now? Should I wait? Should I rent?
Right.
Like, what's the overall
I mean,
consensus?
so one of the things that you have to take into consideration is not just the immediate future. I mean, when you take out a mortgage loan, it's a 30-year commitment.
Mm-hmm.
So, what you have to decide is, in the long run, does it make sense for me to act now? And I do think that in many cases, it is, well, first of all, it's like I said, it's always smarter to buy than it is to sit there and pay rent.
Mm-hmm.
Do I think that maybe you have a little bit more wiggle room later on down the road when, we start getting some more inventory? Sure. But I wouldn't hold off on it just because of rates, especially since, and this segues into probably the next question, which is what kind of things does the credit union have?
Right.
What kind of products does it have? We have, so I know that everybody has this, like whenever you say the term ARM, adjustable rate mortgage,
Okay.
people, they hold their fingers up in a crucifix and tell you to go pound sand, right?
Okay. Talk me off the ledge then.
Yeah. So the reason why I like our product is, first of all, has a 1 year period that after the fixed period, because you're fixed for however long. So when you see an ARM, it's always listed as like 1-1 or 3-1 or 5-1 or 7-1.
Okay.
That first number represents the length of time the initial rate is fixed.
Okay.
So for a 7-1 ARM, the rate is fixed for 7 years. Mm-hmm. So you won't have any adjustments at all for the first 7 years of the loan.
Okay.
Then after after the 7, the 1 means how frequently it renewed, the rate changes basically. Mm-hmm. So the 1 indicates 1 year. So
Okay.
it only changes yearly. We have caps on our product of 2 and 5, which means that it can only go up 2% max per year or down.
Okay.
It can come down too. And it can only go up or down 5% over the whole life of the loan.
Oh, wow. Okay.
So that's you're limited there. And what's great about it too, like I said, you're fixed for 7 years. I mean, so rates, as we can see on this graph, the rates they go up, then they come down, then they go up, then they come down. It's not like there's not this continuous curve that's going up all the time.
Right.
It's into infinity. It's not going to happen like
Right.
that. So you always have the ability to refinance that at any point during the loan. In fact, you don't even have to wait till your 7 years is up. You can refinance in a year
Okay.
if the fixed rates are better.
Right.
But that rate on that product is as low as 4.25% today. Now that's today. Rate's not
Right.
locked until you
June
actually have a
21st.
contract. Exactly. But that's where we are today. And a 4.25 rather than a 6.25, that's a big difference in monthly payment.
Sure.
And it
sure.
increases your affordability as well.
Yeah.
So.
And again, you can't take anything that we're saying right now as a one size fits all.
Right.
I mean,
definitely not.
Everybody has their own individual
Exactly.
needs,
Yep.
and we're talking about you should buy and not rent. Well, if you're only going to stay in a place for a year, then maybe the right thing is to rent
and wait until these prices start coming down a little bit, hopefully.
Right, exactly. Or you figure out where you're moving to,
Right.
So, but certainly that's going to help people, the ARM product that APG Federal Credit Union provides is going to help people to have a little bit more affordability.
Right.
Any other loan products?
Oh my gosh, we have so many. A lot more than we had before I left and then came back to the credit union a second time. I left and come back twice. I guess it feels like home to me for some reason. But what I would say is I wrote these down because I can't memorize everything.
Okay.
We do have some down payment assistance programs. We have Federal Home Loan Bank. FHLB is something that can only be used by like institutions, like financial institutions. You can't do that with a broker unless they farm it out to a bank, because it's only for banks and credit unions.
Okay.
And what it is you get up to $7,500 in down payment assistance depending on what your position, what kind of job you have. Mm-hmm. Anybody in the healthcare industry, I believe, police officers, teachers, anybody and firefighters, I'm sure, anybody in that field gets up to $10,000.
Oh, wow.
Which is huge.
Yeah.
So that's now I will say that has very, very conservative income requirements. You have to make under a certain amount for that.
Gotcha.
So you do have to qualify income wise, and that's how it is with any DPA program, any down payment assistance program. We do have Maryland Mortgage Program. We just onboarded with MMP.
Okay.
So we do, of course, have that Smart Buy 3.0, which will pay off some of your student debts and things like that. That's one we have access to, and all their other programs as well. We have a self-funded DPA of $5K that the credit union funds itself. And then what's really cool, and I did a ton of these back like a couple years ago, were 80-20 loans. So we have an 80-20 loan, which means that you have two different mortgages. You have an 80% mortgage and a 20% mortgage. So you have a first mortgage that's for 80 and a second mortgage that's for 20%. That allows you to finance 100% of the purchase price. The only thing you have to come up with in that situation is the closing costs.
Okay.
And those are going to vary by house, literally down to the house level. But they,
Sure.
generally speaking, they always like to say between 2 and 4% of the purchase price you're going to see in closing costs, maybe up to 5 now.
Okay.
So
I usually estimate like around 4%.
Right,
when
exactly.
I'm working with people, but it does vary.
and it varies too based on purchase price, because the lower purchase price properties, the closing costs are going to be a higher percentage of the total purchase price, whereas the high end stuff is going to have like a lower percentage.
Okay.
So we have that. We do offer conventional VA and USDA loans. We refer our FHA business currently, but we do plan on onboarding that at some point soon.
Okay, cool. Very good. Well, that's awesome, and it sounds like there's a lot of opportunity there for people to maybe not just have more buying power, but also some assistance programs and stuff like that.
Absolutely.
Before we ask some of our last wrap up questions, where can people connect with you?
Oh yeah, absolutely.
To discuss any individual options that they might have.
They can call me my direct phone number, which goes right to my house because I'm working from home since March 30th of 2020. It'll take you right to my desk phone. It's 410-893-7376. Or my email address is just my first initial and last name at apgfcu.com. So it's G as in Gregory Johnson at apgfcu.com.
Awesome. All right. Well, I'm putting you on the hot seat here, okay? So I got a few more questions, some mortgage related. Actually, none mortgage related. Okay.
You had one that was.
I did have one.
Yeah,
but you changed it on me.
Did I?
I don't know.
The one about sources of information for mortgages.
Oh yeah, that's true. That's true. But you're like, does it have to be about mortgages or?
Yeah. Well, this one. Well, I had some points that I was going to make about. The biased news. You had said there's so many biased news sources out there.
That's true. Yes, that is a good question that I wanted to ask.
Yep.
Yes. So many things that we are looking at in the media right now. What do you believe? What do you not believe?
Exactly.
So what are some good, reliable sources of information, especially when it comes to the industry, the mortgage industry and such?
So I know I'm going to come across as sounding biased, but again, I'm not a commissioned loan officer. What I'm saying is that the absolute best source for information regarding mortgages, questions, whatever you have, is to call somebody that you know, like, and trust. That's a mortgage loan officer.
Yep.
Because they're going to give you the no holds barred, honest truth.
Yeah.
As long as you trust that person. And we have the most up-to-date information about lending guidelines. We know about the most recent, the current product offerings and down payment assistance type programs and stuff like that. You could sit there and do the research yourself. You can certainly do that. I mean, you can go to Maryland Mortgage Program's website and find out about their programs. You can go and look, in the news about what's going on with rates and everything like that. But the person who really has the closest, eye on the picture is your LO.
Yeah.
And so,
loan officer.
Yes, exactly. As long as you trust that person, because there's people out there that I'm not going to say they're untrustworthy, but I'm just saying that there's an interest built in sometimes on that person's side as well.
Sure.
So just somebody that you know and really like and trust.
Okay. Awesome. Well, thank you. Yeah. Man, where did it go? I'm telling you, I'm screwing. All right, here we go.
You got it.
Yeah. All right. Now, outside of mortgages.
Right.
Okay. Do you listen to podcasts?
It's funny. I don't. I do listen to news all the time.
Do you listen to the TMA Connection? It's
that's right. I'm sorry. I did forget about that.
Okay. Just making sure. It's not on Apple and Spotify yet, but it will be.
Oh, really?
It will be.
I'm excited about that because I have Spotify, so I'll check that out.
Very good. Yeah,
fantastic.
Please subscribe. Yeah. Okay. So not a big podcast listener, but
right.
Okay. How about what are a book or two books or that kind of fuel you and what you're doing as a individual, business, or whatever. What book recommendations would you have?
So I would say, I like to look at, like, if it's for business stuff. I mean, some of the books I like to read are kind of, dry, because this is kind of a dry topic. But in order to understand how credit works and things like that, there's people that, like, I would say, like, Murray Rothbard, or there's a gentleman who wrote a book, I'm blanking on the name, about how the Fed works, called The Creature from Jekyll Island. So I've read that. It's a huge book, but it's got all kinds of information in it. And then I also just, as far as books go, I'm going to have to say the Bible for sure, because that's, I draw who I am, my character, from that, my relationship with God. So the Bible, I do listen to sermons from like Louis Giglio and Vodi Bochum, and I really like hearing it because it's inspirational to me. That to me is the best way to pep myself up.
If there was one or two inspirational scripture passages or quotes from the Bible, what's one that really resonates with you?
So I had a really dark period for about 3 years, 2.5 years, and I was just really depressed, really, really, really bad. And so there was one scripture that really just came, well, two really, but one in particular that came to mind when that was happening is John 1:5. And it says, "The light shines in the darkness, and the darkness has not overcome it." And I just had to keep on meditating on that fact, because the darkness, which was my whole experience living at that point,
sure,
was not able to be put out the light that I knew that was in my faith.
Yeah.
So that was a huge one. And then I like Romans 8:38 through 39, which talks about just nothing can take you away from the love of God, and Jeremiah 29:11, which says, I know the plans I have for you, plans to prosper and not harm you, plans to give you hope in a future. So those are always good, positive things to read.
That's awesome. Again, if people want to connect with you, we'll throw it up on the screen one more time.
Cool. Right.
Give us that contact information one more time.
It's 410-893-7376, and then you can email me at gjohnson@apgfcu.com.
Well, before we ask the last question, I want to acknowledge you for just being that person that you can know, like, and trust. There have been times when I've been working on a transaction that had nothing. You weren't the loan officer,
That's true,
and you still pick up your phone, and there's no hesitation. It's like you're a good, reliable source of information, and you're always willing to help. But certainly, through working with our clients, you've done such a phenomenal job in the past with them.
It's been a pleasure.
And but you're just a good human being.
Thank you, Tim. So are you, man. Absolutely.
Well, stop it now. But in all honesty, I cherish the friendship that we have, and I think you do have a good heart, and you really do look out for people, and that's huge.
Treat people how you want to be treated, right?
Amen. The golden rule, right?
That's right.
So, which leads to the last question. You're making a difference in the world,
right?
But certainly somewhere along the line, somebody has made a difference in your life.
Oh yeah.
And so who would you like to acknowledge as someone who has made a significant contribution to who you are today?
I'm gonna have to say first and foremost my wife. Because during that period I discussed with you a minute ago about that really bad time in my life, I can't imagine it was very easy to be married to me at that point. And she stuck with me through that time. And when you take those vows at your on your wedding day, those aren't just words. That's a commitment and a promise. And she was my rock during that time. She really was. So that was the first person I would mention, and then I would talk about my friend Chris Dather, who's the man who led me to my faith. Thank God.
Awesome. That's awesome. Well, I'd like to thank you for joining us today, talking about something that's so exciting as interest rates.
Yeah.
I'm trying to.
It's fun to talk about, I guess.
Right. But I think it's something that's just so important.
It is.
It's so important, especially right now. In a year or two, maybe it's not as important.
Right.
But right now, it definitely is a topic of conversation with many people, and not a whole lot of people are educated in that. So
right.
hopefully this has brought some people some value today.
Definitely.
So yeah, again, reach out to Greg if you have any questions about mortgages or anything else, really. And if if you haven't subscribed to our podcast, we are going to be on Apple and Spotify and all those other podcast platforms very, very soon. But the video portion is going to be being put on YouTube, and we're growing our YouTube page and putting a lot of good content on there. So please go to YouTube, press the subscribe button, comment and like on the Instagram and Facebook, and hopefully we can just spread the good word for people that need to hear it. So again, thank you so much for joining us today. Until next time, live your life to the fullest, and we'll see you soon. Take care.
Thanks, Tim.